Hello and welcome back to an episode of the CTO Show with Mehmet. Today I'm very pleased. Joining me, Mike Collins. He's the CEO of Alumni Ventures. Of course, as you might guess from the title of Mike, he's in investment, and we're gonna talk a lot about startups, and we're gonna talk also about what trends he's seeing currently. Without further ado, Mike, something I do with all my guests, I keep their personal introduction to them because I have a theory: no one can introduce someone else better than themselves. So just like a little bit about like how you started and what you're currently up to, like why you started Alumni Ventures, and maybe we can start the discussion from there. So the floor is yours.
Mehmet, thank you. And I'm pleased to be here today. Um, yeah, I started in venture capital in 1986 in Boston, right out of college, and at a firm called TA Associates, which is, one of the top venture capital firms in the world. Um, I worked there and then went from there to Harvard Business School, where I met and became friends with a professor named Clayton Christensen, um, who is one of the great thinkers, I think, of all times when it comes to innovation and entrepreneurship, and was a huge influence on me. And have really spent my entire career at the intersection of venture capital and entrepreneurship and investing. I was very fortunate to, found what I like to do and was relatively good at early. That was more luck, I think, than anything. Um, but in 2013, I uh, started Alumni Ventures really out of kind of a personal frustration, like a lot of entrepreneurs, which is on one hand, I'd learned how important venture capital and entrepreneurship and innovation is in the world economy,
Hmm.
and how really it was very difficult for individuals to have a portfolio of high quality venture investments. It was really a business that kind of evolved in the 1960s for institutions. And through a variety of reasons, even to this day, it is very hard for individual investors to put together a portfolio that is appropriately large and diversified enough and consists of enough high quality investments um, to really reflect what they should have. I mean, it's very clear, Mehmet, about with SpaceX going public at a $1.7 trillion valuation. Anthropic's going to, I think, go out here at a huge valuation.
Right.
It is just there is just so much value now created in the private markets that I think it's really hard to say you have an equity portfolio if it's just public companies anymore. So it's, we all want diversification. We all want to own the machinery of capitalism, which is equity. Um,
Right.
but public stocks are really dominated by 20 companies. You buy indexes and you think you're diversified. Well, you're not that diversified. And but even more, just so much value now. Companies are not going public, and they're either selling or they're waiting. And so you have, 500 to 1,000 companies that, you know, early in my career, those all would be public companies. You could buy Apple at the IPO or even a little bit later and still, kind of ride the growth of Apple or Amazon or Microsoft. Now, going public is kind of the last stop on the train. And so, that's what we try to do at Alumni Ventures. We try to make building a venture portfolio something that regular people can do.
Right. Mike, this is something which always, for me, I didn't see it until I start to learn more about, venture investment. But if I would be someone who is detailed oriented. I should see what you just mentioned because, we know that the opportunity in investing very early on when the company is still maybe in a pre-seed stage, or let's
Yeah,
say for people who are like still not that confident, maybe in a series A
yeah,
stage where they have a product market fit, they're looking for growth.
yeah,
But yet, when we still talk, and I'm talking here globally, by the way, I still talk
yeah,
even to people in the US, in North America, in Europe, they have this doubt about startups and they think it's like a very high risk. And when I try to tell them, but this is the whole thing,
yeah,
because if you measure the time, like Apple maybe, and I think the technology company that came out in the late 70s, early 80s, they were a little bit faster, and people, as you said, they start to see. But if we look at the valuation, Mike, like if we compare like the era of the Apple and the
yeah.
Microsoft and these great IPOs of the times also to what we are seeing now, are we seeing like more aggressive growth that is happening at the same pace? Is it like faster? What's the opportunity that majority of the people are missing out here, in your opinion?
So let me come back to this very natural reaction of, oh, venture capital is risky, right?
Yep.
And that is a totally reasonable position to have. And I think most people who say, and it is risky if you do what I'm going to call a random deal once in a while. So
Right.
your friend shows you hey, here's a seed deal, you can invest in it. And or your accountant sends you a deal and you do a deal or two a year. I agree with you. That is risky. And that's more like you want to do that because it's fun to gamble and and maybe you're helping out a family member or it's fun. That's fine. Um, but there's a couple of things about venture capital that is really important to understand for your listeners, I think. Number one is really good ventures end up with really good venture capital firms as their lead investor. Um, so companies like Khosla, Andreessen, Sequoia, Benchmark, Lightspeed, GB, USB, there's 100 to 200 really top venture firms worldwide. And if you are running a good startup, you are very quickly, probably at your A or your B round of financing, are going to be bringing in one of those top or more of those top tier players. So the challenge is for most individuals kind of doing this alone, they're not going to get into a Sequoia A round as an individual with a $25,000, $50,000 check. One, they're probably not even going to hear about the company. Two,
Right.
the company is not going to bring them in to their deal and deal with a stranger that owns a little bit of their company. They don't need the 25 grand. They don't need the potential hassle of an individual. So on one hand, they're right. If you just do venture capital kind of randomly, that is not the way we think it should be done. We think venture capital should be done with a big portfolio where you are investing alongside really strong lead investors. And if you put together a portfolio of, you know, 25, 50 companies, and they're led by these kinds of venture capital firms, I don't think that that's frankly any riskier than investing in a basket of 50 public companies. So it's like the key is how do you get access to a portfolio of 50 to 100 top tier venture capital deals? And that's really kind of the secret sauce behind Alumni Ventures is we spent the last 12, 13 years pooling together individuals. So none of us can do this alone, but together by pooling our money and pooling our network, we're able to compete and to get into deals like Grok, like Aura,
Hmm.
in companies like Anthropic and SpaceX and Stripe through our sister company that does more later stage stuff. But we have we have a tremendous portfolio, and that's why we exist. We exist to let regular people who in the United States, you still have to be accredited,
Credit.
which is we can discuss kind of a crazy rule, but it is the rule. You can go to Vegas or Kelce and bet on anything, but you can't put $25,000 into, a portfolio of tier one VC deals unless you're rich already, kind of crazy, but those are the rules we live by. So, AV really is a business that serves accredited investors, but we really try to educate. We really try to help people develop their own strategy and plan, and then help them execute that plan by really helping them to build a large and diversified venture capital portfolio. Because we just think it is so important that more and more people, it's not just, let's just take SpaceX, goes public. The first 1.7 trillion went to guys like me and institutions and sovereign wealth funds and family offices. And you didn't have to get in to the seed round of SpaceX to do well. There you did obscenely well.
Right.
But even if you were in the series B or C or D, you were in, versus going in at the IPO, right? And again, I love SpaceX. I think there's a great future for space, and Elon is a generational talent. Um, but it's a lot. You'd rather have been in to SpaceX at a $50 billion valuation than later. So I actually even think that there's not just two markets, there's actually three markets. There's public stocks, there's venture capital, which is our space, and then there's these late stage private companies, the companies who could be public anytime they want, but they prefer to stay private. I mean, more and more entrepreneurs are saying, I don't need to be public. I can raise capital privately. If you've got a good business, that's not a problem. I can provide some liquidity to my employees through secondaries. So the ability to kind of, let your teammates buy a house, or take some of your early advisors or seed investors and give them some liquidity. It takes the time pressure of selling the company or going public off the table. So, and frankly, it's just, you have a lot more flexibility privately. You're not going to get sued if you have a bad quarter. You know, you're
Yeah.
not gonna have you're not going to have macroeconomics things driving your stock down by 20% and all of your employees freaking out because of it. So, there's a lot of very rational entrepreneurs who are saying, I prefer to stay private. Thank you very much. I'm in no rush.
Right. Mike, all what you said is something, every single, the past 2, 3 years, I try to learn a lot about, the business model of a VC firm. I enrolled even in some courses to understand more. I read every single book possible. And to your point, like, you have to do a lot of bets until you find, the one that can return the whole fund. Actually, this is what you aim for now, but still we see the people who argue like, hey, I can do this kind of diversification by putting like small angel checks, like $1,000, even maybe 5K
Yeah.
in a bunch of companies. Do you like, and usually I tell people, hey, like maybe you can start with this, but if you want to really see like the big, returns, it's probably better that, you know you need to be investing in a venture capital as an LP. So now, and again, the discussions start to come up because people, they say, hey, like now AI can help me in finding these promising companies and
Yep.
all this. What's the role really for the general partners now to you know to tell people like, no, okay, you can write your own check, that's fine, but if you want to see like the larger picture, the bigger picture, you still need to have these connections to the GPs who are managing these firms.
Yeah. I think it is, put yourself in the position of a really good startup. Okay. Um, why are you taking money from this person?
Hmm.
Assumption is, oh, I need the money and they're giving it to me. Well, that's not really, if you're a good startup, that's not really the problem. Okay. You're having really good professional venture capital firms kind of competing to be an investor in your company, right? So getting a venture portfolio is easy. Getting a good venture portfolio is nearly impossible for an individual acting on their own. And I've been doing this 40 years. It is really, really hard because, you know, you have to know about the company. You have to convince them to take your money. You have to, build a portfolio of 50 to 100 companies. And oh, by the way, then you also have to file tax returns on every one of those investments. If
Right.
the math basically says, you are pointing it out, if you have a portfolio of 100 venture investments, probably you're going to lose money, even if you're a top venture firm, in half of them.
Hmm.
And a quarter of them, you're going to, lose a little, make a little money. And then maybe 10% of those companies, 10 of 100, are going to provide all of the returns. The issue is just you don't know which 10. I mean, it's just, you can use AI all you want, but there are so many uncertainties. These are things that don't exist yet. So, and then, oh, by the way, if you knew which 10 out of the 100 that Andreessen Horowitz was doing were going to turn out to be the home runs, why are they taking your money? Right. So
Yeah.
it just is, here's what I can say that's constructive. One, it is free to get educated. So learn about venture capital, learn how it works, learn the terms, learn the good firms, look at the technology trends. You know, we run free webinars every week, online, in person. We have videos. There is AI. You can learn about anything if you want to put your mind to it, right? So, one, start with getting educated. Two, I feel very strongly that if you're going to invest in venture capital, you need to invest alongside really top venture firms. You have to either get into their funds, which
Right.
takes enormous amount of money, 10, $25 million minimums for a lot of these venture capital firms to invest in their funds. So I was talking to a large Korean conglomerate, and they were trying to get into a top tier venture firm's most recent fund. And they had $100 million and they could not get in. They did, the venture firm said, we will put you into our health tech fund, but you're not getting into our flagship fund.
Uh-huh.
So access to these top venture firms is very, very hard because they've had relationships with 30 years with organizations and people, and they've made enormous amount of money themselves. So they're investing their own money. So again, they're not interested in taking your $25,000, frankly. So,
Yeah.
but the deals that you want to get into at the seed, Series A, Series B have those kinds of firms leading the round of financing. So, one, get educated. Two, figure out how you can get into top tier deals. And number three is, how do you develop a portfolio that has 50 to 100 companies in it? Right?
Right.
Otherwise, otherwise it is gambling. Otherwise, it is for fun.
Yeah.
Otherwise, but to really, you need to think about it in the same way that very rich people think about it, and endowments and pension funds and sovereign wealth funds. They own public stocks, They own late stage private stocks in a portfolio. Um, and they're owning a broad swath of hundreds of venture deals. And they're
Right.
probably in 5 or 6 different venture funds. And so they own equities along the life cycle, along the journey. And so Alumni Ventures exists to help individuals with a lot less money, $25,000, $50,000, develop a portfolio of venture capital deals, late stage private deals. That's where we can help supplement what you have in the public markets. And we do that because we've built up a huge network of customers and we pool money together. So together, you add up the $50,000, $100,000 from 15,000 different people, and all of a sudden it's a meaningful check.
Right.
And more importantly, like, why does this really good company where they're having their A round led by NEA or Bessemer bring in money from Alumni Ventures? It is because that network, all of those individuals and 1,600 portfolio companies are valuable to the entrepreneur. So Alumni Ventures, I think, arguably has the best network in the industry. So it's like, if you're the entrepreneur, okay, I've got Sequoia leading my A round. They're putting in $25 million. And I'm going to take $2.5 million from Alumni Ventures. Great. And their network is fantastic and helps me with introductions, helps me with recruiting, helps me achieve my business goals. And oh, by the way, their network is also somebody I want to sell my product to, or when I do go public, I'm going to have a built-in network of tens of thousands of people who might want to buy my stock at retail. So it is a very different approach, but it's really that's our mission in life, is to help the individual investor do what the big institutions do, which is to participate in the engine of a capitalist world.
Right. At early stage, so you can, figure out, I mean, to find out that you are able to get these big returns, which probably an IPO cannot guarantee. Because I think I read sometimes, like, I can't remember the exact number, but it's a large percentage where IPOs, even they are shiny, like, of course, we will exclude the big ones like SpaceX, probably Anthropic is coming, OpenAI would come. Of course, like, I'm sure these will be successful ones, but I mean, majority of the time, if you look at the company stock price after a while, actually it decreases. And as you said, the people who, like, they get the gains are the ones who sell at the time of IPO, right? Who are the early investors. Now, I want to discuss something very important nowadays, which is, I'm hearing a lot of opinions about it, which is the AI and the evaluation and the valuation for the AI companies, Mike. um Sometimes we're hearing, in the wire, about companies with zero revenues. They have just, you know uh, maybe an MVP, and they're raising like large amount of money with high valuation. And sometimes we're hearing about, you know other companies which they have some, motion, but they're not able to raise the same
Mhm.
amount of money, not the same valuation. And there's like a doom and gloom in the AI. And probably I can say the same thing in maybe fintech, in also health tech, but AI now is the dominant theme. So what are you seeing, happening here different from what used to happen in the SaaS era, let's say, or, in previous, like, these cloud computing,
Yeah,
waves? But why in the AI these valuation are going to the roof, Mike? And how we can separate what's real from what is just like, yeah, it's just another AI company.
I guess I would encourage people to avoid the extremes. So again, I just have the perspective, having been doing this for 40 years, that I've seen technology disruptions before. And I truly believe that, AI and things going on in life sciences, things going on in energy, things going on in space are truly disruptive. But I do think, people who say, oh, AI is going to replace all humans, or this is going to lead to 50% GDP growth in 2026. I think there are AI utopian people,
Hmm.
there's AI doom and gloomers. And those things have always existed from, the discovery of electricity, the industrialization of the automobile, the personal computer, the smartphone. These things tend to disrupt things, but they take time. And the extremes are really not the way to think about it. So there's nuance. Do I think AI is an enormous disruption in technology? Absolutely. Is it going to change every career, every company, every society? Yes, 100%. I believe that. Do I think there are individual companies that are incredibly overpriced and not worth investing in? Also true. Do I think that there is going to be backlash? Do I think there is going to be AI companies who fail miserably? Absolutely. Do I think that there is going to be unanticipated startups that change the world? Yes. Do we know what they even all are yet? No. I mean, it was 6 years after the smartphone that Uber got started, and that many, it's not everything is in the first year. I'm old enough to know that, there was there were 20 search engine companies. Google was one of them. They won and created one of the great business franchises of all time. In hindsight, that's like, oh, why didn't I invest? Would you have picked Google versus the 19 other ones? It's easy to say that in hindsight. It's very hard in the moment. So I do think we're likely to see all of those things be true. I will say, that's why having really good, disciplined people helping you create your venture portfolio is important. You need to have, discipline. But again, this extreme view of it's all hype, it's a bubble, that's just easy. That's easy, sloppy language. It is also to say, oh, all spend is good. Every startup that is doing AI is something worthy of investing. It is equally nonsense. So it's really, you know, you have to do your work. Creating businesses is hard. It takes a long time. People that want to kind of get rich quick in any form of life, investing or with their career. No, I mean, good things are hard. Hard things take a long time. You look at NVIDIA, right? It's been a
Yeah.
40-year journey for Jensen and his team. They've evolved, they've struggled, they've nearly went out of business. You take Amazon, everybody was giving Bezos grief for years about, you don't make this is a crappy business. You're never going to make any money. It's, I would just urge people to think about this strategically. Think about it for the long term. Think about, how do I get rich slow? How do I invest prudently over time? And just kind of trying to day trade or find something that's hot and jump on, get in, get out. Um, Again, that's dopamine, that's gambling. Um, that's not the way to do it. And that's not true in venture capital. A venture capital is, you're investing in a company that's probably going to take 5 or 10 years at least to create value.
Right.
And so, again, if you want to day trade and you think you're smarter than the rest of the world and you want to do that, good luck. You're
Yeah,
not. You're
absolutely.
not. And the only people making money for those people are the ones that are getting some kind of vig on the transaction and playing off of your dopamine addiction. So it's like if your investments require you to look at your phone every day, yeah, that's in the gambling bucket.
It is. It is indeed because, you know, I think it's a human nature. Sometimes we look for shortcuts.
Yeah.
But I tell people like this asset class is the one that there are no shortcuts. It's just, it's a game of waiting,
Yeah.
and you just, you set and forget, as we say sometimes technically. You decided that these guys, this team is worth investing in them, and you just trust your gut, you trust them, and then you just wait. And
And
talk about,
you have enough of them
yes,
that are vetted and you love every one of them, but you know you need to invest in 50 or 100 of these things. And you want to invest not only just in 100 of them, but that's more like 25 this year, 25 different ones next year, 25 the year after that. I mean, even the great investors of all time, people like Warren Buffett, um, they had a power law too. Most of Warren's wealth was created because he's lived to be so old, frankly. And he's had
yes,
decades and decades of compounding and things going up and things going down and recession and war. And, you know, he's just lived a long time. And then, he's disciplined and he's made enough good investments. But again, I think and you can ask ChatGPT, not every Warren Buffett investment works out. And so
no,
he has his 10 or 20% of his investments that have provided the great bulk of his returns as well. So he's picked a handful of really good companies and he's ridden them for decades. So it was, and then Elon, who he's been building things for 30 years. These things are hard. They take time. And again, I would just urge people that discipline is how you become wealthy. And it's not, oh, I need more next month, so I got to gamble. The venture
no.
capital then is not for you.
Right. It doesn't work this way. Speaking about founders and teams, Mike, like from your experience, and I'm sure you've met thousands maybe, and you listened to a lot of pitches also as well. So what for you? What makes you think that this team gonna make it, like a founder or founders? And maybe also something, because some founders are a little bit special, let's say like Elon, let's say, but of course maybe we don't have them every day, but still there are these founders that have the ability to create what we call it category defining companies, like, and how usually you spot these teams and these founders.
Well, it's a lot of practice and it's a lot of pattern recognition, but you do develop a pretty good instinct. If I were to articulate it, I would say they have an enormous amount of grit, the ability to just be unreasonably committed to their idea because there is going to be so many naysayers, so much adversity, so many people calling you crazy. You need to be just insanely committed to your idea. And usually it's not really even motivated by money. It is just an incessant belief that the world needs this thing that I'm building. I would also say I'm a big fan of Peter Thiel's perspective of really looking for entrepreneurs that think the world has something fundamentally wrong and that they think um, they can almost create a reality distortion field of pulling the future forward. Like the world needs to be on Mars. And people think that's crazy. People think that, but I am going to pull that into reality. So you look for entrepreneurs who just see things differently. And again, I think Steve Jobs was often described as this kind of personality that would just create a world and bring people into his orbit around building Apple and the personal computer and, the smartphone. And so there's vision, there's salesmanship, there's vision, and just an enormous amount of grit. And so, you know, again, entrepreneurs that are in it because, oh, I want to make money and I want the outcome of being a successful entrepreneur, usually are not the people to invest in, because it's too hard. I mean, Jensen, I think pretty famously was asked in a podcast, if you went back and talked to your 25-year-old self, what would you tell yourself? And he
Yeah.
answered, do not start NVIDIA. And this is obviously one of the great entrepreneurs of our generation, built one of the most valuable companies on the planet. But it was so hard and it took so long and there was so much adversity that he just had no idea how hard it was going to be. So it's like you're looking for somebody who has the ability to do that, to weather it. And it's just, there's a depth of conviction, that you're looking for.
Right. Mike, like I think, correct me if the number is not right, but I think you've raised like $1.5 billion, like it's asset
Yeah.
under management. um uh, this is not an easy thing to do,
Yeah.
even in the US. And I'm sure growing the company, I mean the firm, to this level wasn't ever a straight line. So if you want to reflect and like what are some of the toughest inflection points that you had to take, like very tough decisions to go through.
Yeah.
um, Anything that you can share with us.
I mean, very early, it was very clear that Alumni Ventures was solving a real problem. So we got kind of product market fit pretty quickly and we're growing nicely. And then COVID hit.
Oh,
And and so like everybody, there was a very scary 3 to 6 month period where it was like, people forget, we did not know how bad the disease was going to be. People were dying, businesses were being shut down. Um, we were all working from home for the first time at Alumni Ventures. And so, we, you know, we reduced our staff by, I don't know, 20% pretty quickly. We kind of cut our expenses. We battened down the hatches. We, you know, really focused on investing, in our portfolio companies. Um, and then it actually turned out to be a really good time for technology and for venture capital. And we had kind of a really strong recovery, kind of very V-shaped. But yeah, I mean, uh, that was kind of a black swan event that nobody could predict. And it's like,
absolutely.
this is the, and this is what you need to expect if you're going to be an entrepreneur, which is you just never know. And the humility of being a good venture capitalist, which is, we've made investments in, I think, 1,800 companies. And, our active portfolio today is probably 1,600. Um, some of those companies will pivot. Some of those companies that we think are going to be home runs will not turn out. Some of those that, have really struggled will turn it around and be enormous successes. It's like, you know, yeah, I mean, we got news yesterday of a company that kind of we didn't think was going to, make it and be successful, and all of a sudden now we had really good news on the company and being a venture capitalist is very humbling. And You have to approach it that, just because you made one good investment and it turned out, you're not a genius and everything you touch is going to turn into gold. It is way too hard. It is way too competitive. But yeah, I mean, I think our company surviving COVID, we got stronger. And, we had kind of gone through our own journey of everything working out and then having this thing happen to us and really having to go back to first principles of like, okay, what's important? What do we need to do? And what can wait? Or what is really not necessary for our customers or our portfolio companies. So, yeah, that was kind of one of our stress moments for sure. There's been others.
Yeah. Mike, you talk about also the community. We touched about the connections, but you say like the community is being the new currency for venture investing. Um, how that looks in practice, and is it like just for your own investors, or is it like also for the founders? Like how is that work in from your
Yeah,
perspective?
it, I'll give you two examples. So, first and foremost, our network helps us get access to the very best venture deals. So, we're in there pitching for allocation into a venture deal. And usually it's a simple conversation of how can a really powerful global network help your company? Well, maybe they need a board member. Maybe they need introductions to this type of customer. Maybe they need help recruiting. Um, we're not their business development arm. We're not their recruiting department, but we have a really good network. And so we have a dedicated team at Alumni Ventures that helps our portfolio companies get introductions to the people they want to talk to. And that is really valuable to them. Um, the second part of it is for our customers. We really try to bring our network together physically to host events. So
Hmm.
people enjoy getting together to learn. Talked a lot about learning on this podcast, meeting our portfolio companies. We actually have dozens of investing clubs that meet via Zoom once a month to talk about one of the deals we're doing. So, we believe strongly in AI and the power of this technology, but we also believe that humans still enjoy a lot of human to human stuff. They like physically getting out, getting together, talking to other humans, hearing a good discussion about a technology, meeting an entrepreneur. So that's part of being part of the Alumni Ventures network is having the opportunity to do some of this in real life stuff and to learn and to be helpful because it may be one of our portfolio companies from the Middle East that wants to raise money in Silicon Valley. But then they want introductions to, Japanese corporations that might be interested in their product. So, we try to help. We're like a favorite aunt or uncle. We leave you alone, but if you want help, we try to reach out and make connections for you.
And I think this is really it's the power of connections and introductions, and this is how everyone, it's a win-win for everyone, like
It
for
is a
your customers, for
yeah,
the founders, and even for the community, because they would be learning about how to do proper I would say, uh, follow up on the technology investment, like how to get into someone who have skin in the game, like yourself, Mike. And I'm sure like this is one of the main things why I was happy to have this podcast with you, is to tell people like this is where, when you have someone and a team, of course, who have done this for a long time, so you do with them the investments. So, and people, they don't understand. Maybe you gave some examples about the taxes and the other things, but there's a lot of nitty gritty stuff that goes in the background, that people, they see just the announcement. I was like this, by the way. Like I didn't know a lot of the thing that goes in the background from the moment you try to source the deals until you secure your spot, and then actually you go in negotiation and the whole stuff, and then until the exits. So there's a lot of work that goes in the background, and I think people, they need to understand that you are in safe hands, when you do it with a proper
Of
venture firm.
130 people that get up every day to serve our clients, to source investments, to be sure that they have a good investor portal, to be sure they get their tax information on time. Again, I just think it's practically very, very hard for 99% of the people to do this the way that it should be done. And again, if you
Right.
want to just do a deal now and then for fun, that's fine. But again, I would just encourage people to visit av.vc and, attend our webinars, start learning, do your research, due diligence, start looking at the deals we're doing, and just say, do I have access to these kinds of deals? Uh, I'd say with a great bit of humility, no, you probably do not. Okay. So,
Yeah,
I know that's why I started the business, because even though I had spent time in the ecosystem, I couldn't do it alone. And
true.
I couldn't put together a portfolio myself that would be 1/100th as good as the AV deal access today. We have built an enormous company and machine so each one of our investors can participate in a smart way.
Great. I know we said about, you people, they have to be accredited investors, but do you accept international investors also, Mike?
Yeah, it depends. But yes, we have about 5 or 10% of our customers are international. Again, there's different rules. Some of those people we have set up kind of offshore investing mechanisms. Some international customers of ours already have kind of domestic US access. So my advice there is just reach out to our team. We have a whole set of people that just talk to prospects and investors, and um, talk to us. It's very simple. That's just, again, I know it sounds old fashioned, but that's just the easiest and most efficient way, is just get on the phone with one of our people and see if there's a way that we can help you.
No, I agree with you, Mike. Maybe it looks like the boring old style way, but this is every single episode. I ask, my guests to tell us where they can be reached out from, and thank you for mentioning. I'm gonna put the website in the show notes. Um, we really came to the end of this episode, Mike. Any final thing you want to say before I do the closing?
No, I'm just saying, I think it's a really amazing time in technology. So there's AI, there's incredible things going on with energy, nuclear fusion, fission, renewables. I think there's really exciting, promising opportunities in healthcare and drug discovery. I know most of us have been touched personally, with family members that have had cancer or Alzheimer's or diabetes or heart disease. I think we can all be really optimistic that there's going to be great progress in healthcare and drug discovery in the next decade. I think there's really cool things going on in space, in logistics. I just think it is such a golden age. Just do not believe the people who are extreme, that think it's a cure for everything and it's all going to be tomorrow. And don't believe the people who are doom and gloom and Luddites and wanting to kind of stop progress. Um, both of those things are really wrong. And so, just take it slow, enjoy life, learn, grow, invest, get rich slow.
Get rich slow. I like this approach, Mark. And to your point, yeah, it's not like the end of the world tomorrow, and of course, it's not like the brightest future also tomorrow. So I call it's business as usual, but we have, as you said, this golden opportunity. Mike, I really thank you a lot for the time. It's early morning for you when we were recording this, so I appreciate this. The link to the website will be in the show notes. if you're listening on any of your favorite podcasting apps, if you're watching this on YouTube, you'll find in the show notes. And this, I'm ending this time this episode. So for the first time since 4 years, I'm taking a break for this summer. So we're gonna air this in August. Of course, it's gonna be out in August. So coming back, hopefully in September. Still, we're gonna decide the dates, but we're gonna come maybe probably with the better format, and we're gonna change few things as I received a lot of feedbacks from you, my listeners, and people who follow us. So thank you very much, and as I say always, thank you for the support. Stay tuning for the next season. I will announce it on my socials. So thank you very much, and hope to see you again very soon. Thank you. Bye bye.